Hey traders, John Hell here. I got a question a while ago about moving averages and why I use moving averages, which moving averages do I use, and so on and so forth. So that's what I'm going to talk about in this video here. Guys, do not post trade based on this video. This video here is educational only, and it's here to help you become a much better trader. Okay, so let's get straight into this video here. Now, with my trading, what I'm looking for is to me, the most important thing is the chart itself. Okay, the truth are in the charts. The truth is in a stochastic or a MACD or that sort of stuff. Now, it may be okay to use those every now and then. Actually, no, forget that statement. I don't use them at all, right? I used to use stochastics and RSIs for my first 10 years of trading career. Been doing this for 15 years now. So the most important thing to do and get better at is learning how to read the market, right? We talk about like peaks and troughs, who's in control, strength in moves, false breakouts, volume, all those different things. Because volume is also important with the price action. Learning how to read those two things are much more powerful to your trading than looking at RSI stochastics. So many people look at indicators as the holy grail. It's not. The better you can read the chart, as in like the chart itself. Now you can overlay volume in that to combine it, but the better you can read the chart, the better trader you'll be. I'm not saying the better you can read the RSI. The RSI and all that sort of stuff, they're derivative of the market itself. The market's always given us a bit of a guidance, right? And it's the most powerful thing is the chart itself, isn't it? Well, it is. Now, what I like to use is a few moving averages, but most of the time I only like to use one moving average on the chart. Well, actually, I use two different moving averages. But the one moving average I want to focus on in this video here is the one moving average, and the reason why I use this moving average, because for me, when I'm looking at a moving average, I'm looking at the moving average for two different things, right? I'm looking at the direction of the moving average, and I'm also looking at the slope of the moving average as well too, right? The direction and the slope. Now, for me, if you're looking at a moving average, now for me, I like to use a bit more of a longer term moving average. So for example, if I'm trading a daily chart, I use say such as a 52. Why a 52? I don't know, one of my earlier mentors used a 52, right? So that's roughly 2 months worth of trading, So what is that going to give me, right? It's going to give me basically an average over the last 2 months. Now, if we have the moving average, right? Now remember, the most important thing is the chart. But if we have the moving average, pointing up, what does that tell me? One, that the trend is up for the last 2 months, right? And also momentum is also up as well too. But what it also tells me as well too, that I also do know that if we get too far away from my moving average, then the market is now overextended and we're likely to get a pullback, right? You can see it all along. Now, yes, we can go for a very long run, but they're the three things that I use my moving average for. One is it tells me where the overall trend is. Secondly, it tells me where momentum is. And thirdly, it tells me in conjunction to the history of that stock or index that we're looking at is how far is it away from that moving average. That's also called price and time. If the market does too much price, i.e. get too far away, time then to catch up and we're likely to retrace, right? Even back here, right? We got on the Dow Jones, we had a rally, we came back to the 52. Got a rally sideways, didn't get to 52, but we got a bit of a sideways movement. Then we had a big rally, right? Now you don't know when the drop's going to happen, but look at it, came back to the 52. Now you don't have to use a 52, guys. It's just a generic number that I use. The number's not important. It's what the moving average does. That's the most important thing to your trading, right? So when I'm looking at my trading, I'm all about stacking the odds on my side. What the type of trade that I'm taking and the things that I'm using, and when I'm using a moving average, that's what I'm looking for. I'm looking for basically where is it pointing, because that's going to give me trend and momentum. So if I'm trading with the trend and trading with momentum, guess what? It increases my probability, right? But then also, what also increases my probability, is it close to the moving average or is it away from the moving average? If it's close to the moving average is my interest in, guess what? Now it's high probability, because now what does it say? Now it's not too far away. If it's too far away, well, it's a less of a probability. It might be a good setup, but it may be a less of a probability trade, because now it's too far away from the moving average. So that's how I use the just simple one moving average. And as you can see on the chart, this is all I trade with on the markets. But the most important thing I'm looking at is the chart and volume. And what is that telling me? And then when I'm looking to trade, I'm using the moving average to give me trend momentum. Give me where is the trend? Where is momentum at that time as well too? And how far away is it? Is it overbought or oversold? And you can generally see that. If you go back to any stock using even a 60 moving average, doesn't matter. The number's not important, right? It's just I like to use a couple of month moving average. A couple months moving average to see where that's at. So I hope you can understand why I use moving averages, or why I use just one simple moving average in my trading. After being mentored by 4 different 7-figure traders, I've realized they all have some things in common that actually help them do really, really well in the markets. So I'm actually putting on a free training where I'm going to walk you through the 7 simple but powerful universal laws to becoming a consistent profitable trader while achieving a very high success rate without spending 13 years trying to figure it all out. Plus, I'm going to walk you through the absolute details of my #1 trading system that I trade every single day. The very first link in the description, click on that and you'll be able to go check it all out and be able to go see this free training. And I'm going to walk you through every single detail of these 7 universal laws so you too can start to have the odds on your side. So go do that right now and I'll see you on the next page.